Cash Studio.
Hi, welcome back. As you can see, our entire team is celebrating Republic Day in advance. So we have all our festive gear. And hi, folks. Good morning to all of you. It's going to be a weekday, no two ways about that. The SGX Nifty is now indicating a start well in the red. But let's see. We've dealt with a few days like this. We'll brace ourselves for more. Anuj, what are you looking at today?
Sonia, my sense is that even if the start is good in the broader market, there could be some selling. And I'll keep an eye on some of these, the high flyers, the erstwhile high flyers, where there's clearly now some bit of unwinding which is happening. So unwinding could still remain the theme. So names like Dixon Tech, I think that's the first stock to track. It was down 7% yesterday, of course. But if you see, it's just had a one-way rally. IRCTC, we've seen that play out in the past as well with IRCTC. That would be another stock. I mean, there are many actually. Some of them we'll be discussing in top 10 as well because of numbers. But broadly, that's the space that I'll track today.
All right. Axis Bank is the ICICI Bank of today. I mean, but thankfully the market backdrop is hopefully going to be better. Axis reported great set of numbers. Abhishek is standing by with details. Abhishek, morning.
Well, Prashant, it's one of the best quarter that Axis Bank has had in last 4 to 5 years. So they have outscored peers on a sequential basis in terms of loan growth, NII growth momentum, and is perhaps the only bank amongst the large caps to show an improvement in the net interest margin on a sequential basis. So loan growth has come in at 17.7% YOY, which is the best in last 15 quarters. On a sequential basis, it is close to 7%, which is the best in last 19 quarters. Asset quality, the gross NPA ratio is the lowest in last 22 quarters. Net NPA ratio X of Q3 FY21 when we had the RBI dispensation is perhaps the best in last 23 quarters. They have shown the best return ratios, that is ROA and ROE in last 23 quarters with ROA of 1.3% and ROE of north of 14%. The watch list is at 9-quarter low of just 1.73%. Brokerages remain bullish on the stock. CLS's top pick in the sector is Axis Bank. Target price ranges from as low as 960 per share to as high as 1080 per share. Back to you.
Okay, Abhishek, thanks a lot for that. Nigel, what about Ramco Cements?
Well, Anuj, the numbers were disappointing out there. On the top line, there was a beat of close around 100 crores odd because we were working with a number of around 2.7 million tons of sales volumes, while they delivered a number of around 3 million tons odd. So that explains why there was a beat on the top line. The problem was in terms of margins. Well, that saw a sharp compression both on a year-on-year basis as well as on a sequential basis, and missed our estimates big time. The few factors that played out here, one is that they sold a higher amount of volume. The problem was they sold a higher amount in East India. Profitability is lower out there. So that was point number one. The second factor is power and fuel costs just surged up in the past quarter. If you take it as a percentage of sales or you take it on a year-on-year basis as well, was up more than 90% odd. Jefferies as well as a couple of other brokerages, they've gone ahead and they've cut their estimates. For Jefferies, they have a hold rating, cut their estimates by around 8 to around 14% odd, factoring in the higher input cost and lower prices. Expect the stock to open up in the red.
Okay, thanks a lot for that. So cement names actually going through a bit of a lull period right now. And it's not the best market situation either. But let's go across back to Abhishek. He's tracking Shriram Transport Finance and SBI Cards this morning. Abhishek, over to you.
Well, Sonia, Shriram Transport did report a strong momentum in terms of their AUM growth on a YOY basis, perhaps the best in last 11 quarters, and on a sequential basis, best in last 13 quarters. Disbursements were really strong, coming in at 15,500 crores, up about 23% YOY and close to 4.2% sequentially. However, on the flip side, their asset quality did deteriorate a bit, given the fact that RBI's ruling has come in of daily stamping, which has affected gross NPA ratio, which increased by almost 55 to 60 basis points sequentially. The NII was a beat on our poll, coming in at 2,388 crores, while we were working with a number of 2,220 crore. While on account of elevated provisions, they missed our poll on PAT. CLSA has a buy rating on Shriram Transport with a target price of 1,600 per share. They say that it is an inline quarter. However, they have cut FY22 EPS estimate by 11% on account of higher credit cost. SBI Card, we have seen SBI Card losing out market share for the first time ever on a sequential basis. Now the market share is at 19.2% when compared to 19.4% in the previous quarter. Credit cost remained elevated at 8.2%. The net interest margin is perhaps at an all-time low of 13% when compared to 14.1% in the previous quarter. The restructured book has come down by almost 185 basis points sequentially. Asset quality has also improved. Gross NPA ratio is down about close to 100 basis points sequentially. P&L was strong. Total income up 16.5% quarter-on-quarter and PAT up 12% quarter-on-quarter. Credit Suisse has written on SBI Card. They have cut the target price to 1100 from the 1350 that they had earlier. Back to you.
Okay, thanks Abhishek for that. Let's go across to Sonal then. She's watching out for a couple of stocks, DEEPAK, NITRITE and Burger King. Sonal?
Good morning. Well, let me start with Burger King, where numbers did look good on a YOY basis. So revenues were up 74% to come in at 280 crore rupees. EBITDA also increased by 116% to come in at 33 crore rupees. And the company did report a loss, but the losses have contracted. The company reported net loss of 15 crores versus 29 crore of loss. They added 20 stores in this particular quarter, the total count coming at 294, and they opened 18 BK Cafe this time around. DEEPAK NITRITE, on the other hand, reported numbers which were lower than Motilal estimates, especially on the margin front. Revenues were up 39% at 1722 crore rupees, which was higher than Motilal estimates of 1521 crore rupees. EBITDA was up 8.5%, but margins at 21.7% is a decline on a quarter-on-quarter and on a YOY basis, and much lower than Motilal estimates of 25.1%. Profits went up by 12%, and there was margin contraction across the segments, barring performance products. So for basic intermediates, it was down 400 basis points. For finance specialty, it was down 1700 basis points. And phenolics, that one was down 500 basis points. So all in all, expect a red tick on DEEPAK NITRITE today. Okay, getting us hungry talking about Burger King. Thanks a lot for that, Sonal. But let's go across to Agam and find out about IEX and CRAFTSMAN Auto. Agam, over to you.
Right. Well, I start off with IEX, and it's been a good quarter. We already know that the company's posted about 37% growth in its volumes, because of which we've seen revenue growth of around 38% year-on-year, improvement in its margins as well, coming in at around 84.1% against 81.6%. Consequently, net profit also rose by as much as 38% year-on-year. But CRAFTSMAN Automation, on the other hand, has had a weak quarter. We're looking at a 13% decline in revenues, because of which we've seen EBITDA margins contract by as much as 590 basis points to around 23%, and we've seen profits decline by as much as 13%, not the best quarter for CRAFTSMAN Automation.
All right, Agam, thanks very much for that. Now, India Mart and Zensar Tech should be in focus. Reema's here to tell us why. Reema, morning.
Hi, morning. So Zensar Technology has reported revenues which are in line with street expectations, with a 4.6% quarter-on-quarter revenue growth, but margins for the company have declined for the third consecutive quarter. So margins which were closer to the 20% band have come down to 15%, and the CFO has resigned with immediate effect 31st of January. India Mart has reported a muted quarter in terms of its financials. So revenue growth has slowed down to single digits on a year-on-year basis at 8.4%. Margins too have contracted from nearly 50% to about 40%, though the company had been saying that margins will trend down because the prior quarters were inflated due to the COVID-related savings. The positive is they've seen a sharp increase in their paying subscribers, but the negative side is their inquiries in the business have declined sequentially. That said, the company has also made some big acquisitions. If you remember last year, they raised more than 1,000 crores via QIP, and now that money seems to be deployed. So the company has increased their stake in Vyapar, which is an accounting software, from 26 to 27%. But they've also said that they will be acquiring 100% stake in Busy Infotech for up to 500 crore rupees. So that's a large acquisition that India Mart is looking to do. Back to you.
Okay, thanks a lot for that, Reema.